So everyone is talking about sustainable investing these days. People talk about SRI or socially responsible investing. People talk about ESG investing or environmental, social, and governance investing, or they talk about impact investing. So what are the differences here? That's all I want to do here is talk about the differences. Today, we're going to talk about socially responsible investing. And the basic idea here, this is something that we were doing 20 years ago, and what you're just doing here is you're just excluding sin stocks. Now, of course, sin stocks vary from a client to client, but the types of things that they think about or we think about in terms of sin stocks are going to be alcohol, tobacco, other types of addictive products, animal testing, weapons, gambling, terrorism. Yes, terrorism. In fact, I did a video recently right here where we see that banks, in fact, are engaging with known terrorist entities even after the fact. Of course, you have human rights and labor, environmental damage. These are the types of things. And what you do is you just don't buy those companies, period. You just exclude those. You might have an S&P 500 index minus alcohol, tobacco, and defense kind of a thing. That's what we're looking at. Now, the idea, of course, is you want to have good investments. The question is now, when you remove these sin stocks, are you better off or worse off? The results are mixed. So if you look here, kind of this packed balance fund is a long-term, well-known ex-sin stock type of investment, and their Vice Fund, which is kind of buy the sin stocks. And you can see that since inception, the Vice Fund did better, but then the Vice Fund isn't really doing any better than the Russell 1000. So the results are kind of mixed, and these are just two kind of anecdotal examples. Now, of course, popularity is something that comes into play. And I had a nice long discussion with Roger Ibbotson about popularity. You can check out that video here. But the idea here is that popular assets tend to underperform because they are popular. Their expected returns are lower. You should check that out there. Next, we'll talk about what is ESG. How does that differ from socially responsible investing? Hope that is informative. We'll talk again soon.